Hi, welcome to this introductory video on introduction to management accounting. So what we'll do in this initial video is to orient you on the um, basic concepts of management accounting, what to expect in the next few days as we go through this course, and at the same time give you an overview of what management accounting is all about. Okay. Now, what is management accounting? Management accounting is the process of identification, measurement, accumulation, analysis, preparation, interpretation, and communication of financial information. That's the first main chunk of information that we need to understand. Okay? Used by management to plan, evaluate, and control an organization. Okay? If you look at this initial definition, okay, actually there are two main aspects. First is these activities, right? That's used to um, manipulate or to show financial information. Okay? So actually, what's happening in the first part of the definition is that we are using financial information, right? And how do we use it? We use it by identifying financial information, measuring them, accumulating them, analyzing it, preparing it for interpretation, etc. So this is the first aspect of management accounting. We have to process information essentially. Okay? And why do we process those information? We process those information because we need to ensure that management needs to do what? They need to plan, evaluate, and control the organization's activities. Okay? So if you look at the definition of management accounting, it's really an information system, okay, where we process information. Okay? Why do we process information? Because we are using it for planning, evaluation, and control of operations. So if you look at these aspects, that's essentially what management accounting is all about. Okay? Given accounting information, financial and non-financial information, how do you use that information so that you can support management's objective of planning, decision making, which is part of evaluation, and control? So that is the central concept behind management accounting. Okay? Um, Here is another definition by the IMA. IMA is the Institute of Management Accountants. Okay? An updated definition in 2008 rather than the one in 1981 is that management accounting is a profession uh, that involves partnering in management decision making, devising planning, and performance management systems. Again, these are all management activities, no, or management functions. Okay? And in partnering with management for those activities, no, essentially, what kind of services does a management accountant provide in those activities? Expertise in financial reporting and control. Okay? So the role of management accountants in an organization is very important. Why is it very important? It's very important because they are the ones okay, linking data, particularly financial data, to strategy by being involved in planning, decision making, and control of operations. Okay, so therefore, the role of the management accountant is very important. So probably based on this slide alone, it gives you an idea that management accounting is really fundamentally different from a normal financial accountant. Okay? Why is the roles fundamentally different? Because for management accountant, in the integrity of the reports an issue. Okay? The issue is that they should be able to assist management in the formulation and implementation of its strategy. Okay, and that's what we should be doing in this course. Okay, sorry, I'll go back to give you an idea of this one. No, to give you an idea here in terms of the basic context of management accounting, the idea is that management accounting is primarily involved, okay, in these aspects of the business. Okay? When there's a business need or a business event that needs decision making or support, you know, what management accounting does is to look at data, process that data from numbers to information, and that information will feed into the decision making processes of an organization. So that's very important. Okay? It's a very important aspect um, of management accounting. Okay? So it is a way to process information, and in processing that information, feed into the activities of management. And so that's the idea behind, or the general context behind the role of management accounting information. Now, in this slide, what we do is to differentiate the difference between financial accounting and managerial accounting. What is financial accounting? Okay. Financial accounting is what you learned in your PA 99.1 or 114 or accounting one. Okay. Because in financial accounting, the objective is to report accurate, financial statements for use of external persons or external entities to the organization, right? The objective is to provide data to um, general users of financial accounting information. On the other hand, management accountants do not cater to an external audience. Their audience for the information that they provide are um, are those who are managing the organization. Kasi nga, the idea is that uh, these, uh, these, these management accountants provide support, to management so that they can make the proper decisions for an organization. Another key difference between financial accounting and managerial accounting is in terms of time focus. Okay? For financial accounting, of course, um, the perspective is historical. Why is that the case? Because you are reporting on actual results. Okay? However, for managerial accounting, ang focus is the future or expectation of costs, expectations of revenues, expectation of impact. Okay? Why is it future oriented? Kasi decisions are by nature future oriented, right? And they being future oriented, we need to know whether what we know as past information will be also applicable for the future. Kaya most of the concepts that we will be looking at in this course are concepts that will affect the future, like planning, like decision making, and like managerial control. Okay? Another difference between financial accounting and managerial accounting is verifiability versus relevance. Okay? Because the objective of financial accounting is to show actual results, of course, the objective, you know, but there is significant emphasis on objectivity and verifiability of accounting information. On the other hand, for managerial accounting, what's more important, is relevance of accounting information. Okay? Why is relevance more important? Okay? Relevance is more important, because um, relevance is more important because we are dealing with future information. And so ideally, um, we need more relevant information because that's more time sensitive. Number four is precision versus timeliness. Okay. Usually, if you need to be more precise on information, it will take time to compile that information. Right? Since financial accounting deals with uh, the, the, the the materiality or the fairness of results, then you want our financial accounting information to be more precise. However, for managerial accounting, since it's mainly used for decision making, time is of the essence when you're deciding on something. Right? And so therefore, there's more emphasis on timeliness of information rather than precision. We can deal with estimates, it's okay, because we can deal with uncertainty on how we structure or frame our decision-making guidelines. Now, subject, no? Of course, for financial accounting, those are corporate-wide reports. No? Hindi ka naman nag-issue ng financial statements for a division or the department only. Financial accounting information that's going to be issued to the public will focus on company-wide reports or company-wide results. On the other hand, for managerial accounting, we focus on segment reports. Okay? We use company-wide reports from time to time, but usually what's more relevant in a decision, in a management decision, is not the macro perspective kaagad. Okay? We usually deal with units within an organization, and that's where decisions are made. Okay? As to the rules, financial accounting, of course, follows IFRS. And for managerial accounting, we can be more flexible. It depends on what we want to achieve in the decision-making information. Of course, GAAP may be considered, if what is the objective is to boost earnings, for example. But for example, the management question is, which of these activities will boost earnings? And definitely, you need to know IFRS and the rules. But it's not usually the case that earnings is our um, core objective. Not necessarily the case. Okay. And last is in terms of the requirements. Of course, financial accounting are statutory requirements. They are required by law to be submitted to the proper authority, especially if it's a corporation or paying taxes to the BIR. So um, financial accounting results, FS, must be submitted. Managerial accounting, on the other hand, is not mandatory. There's no law requiring it. Okay? It's simply used as a guide or a way to, um, to, to support management in its decision-making process, decision-making, planning, or control processes. Okay? So what you'll see here is that the accounting that you learned in BA 99.1, BA 114, Accounting 1, okay, those concepts are just one aspect of the use of accounting information. Okay? What we learn in this course, okay, is another aspect of accounting information. How can those accounting information be used and transformed so that it can provide meaningful information for the management of a company? And through those meaningful information, managers should be able to um, get insights out of accounting information. Okay? Because usually these management they're not very well versed on the details, which is normal for managers or especially for high level managers. So what we want to do is the management accountant should be able to provide the accounting context, provide the financial impact of decisions by analyzing existing information, processing it, and using it to support decision making. And that's what we want to do. Okay. Now, here I'd like to give you a more tangible view of what the role of management accountants. So what's the role of management accounting in an organization? Generally, a management accounting or a management accountant will have roles in three distinct elements of management. Number one is planning process. Second is decision making. Okay? And third is control. We discuss each aspect. When we talk about planning, planning is a function where we establish the goals of an organization. Okay? If you look at the websites, for example, of listed companies, you will see their vision, mission, goals. Okay? Those are the um, qualitative expressions, okay, of the objective, the goals of an organization in the long term. What is the role of a management accountant in planning? Okay? Essentially, the role of management accountants in planning is to develop budgets. Okay? Why are budgets very important in terms of planning? Because budgets are the quantitative expression of a strategy or of a goal. Okay? At the end of the day, if a company wants to be the number one beer company in the Philippines, that's the goal or the vision. Okay? At the end of the day, okay, by number one, what do you mean by that? Okay? Market share of X%. And to get market share of X%, you should be having revenues of X billion pesos. And to get X billion pesos of sales, you need to spend this much on capital expenditures. Okay? At the end of the day, those qualitative vision, mission, and goals will have to be translated into an operating budget or a strategic budget. Okay? There has to be a quantitative expressions for it. Okay? And the management accountant assists in terms of building the whole budget and helping the organization quantify its goals. Okay? If you want to be the number one telecom company, what does that entail? Okay? Does it entail number of subscribers? Then if that's the case, then we need to quantify the subscriber base. Okay? If we need this much subscriber base to be number one, how much infrastructure do we need? Do we need to spend so that we have that infrastructure? Because the management accountant understands the financial impact of things, right? And so therefore, it's critical that the finance guy who is involved in planning because he or she will have a good handle, okay, of how it all flows into a meaningful financial information. Okay. At the end of the day, kailangan alam mo yung magkano gagastusin mo. Right? So therefore, the end point of planning, of the planning process, is usually to make sure that you have a fully developed budget. Okay? And that's a very important element of, uh, of management, where accountants play a very important role. Okay? Second is decision making. Okay? Usually, um, in every decision, there are alternatives. Okay? And therefore, the role of a management accountant is to aid management in making a selection among those alternatives. Okay? And usually, how do you do that? How do you provide management with any aid in that selection process? You usually provide the financial impact of those alternatives. If we do if we do alternative A, the financial impact is this much. If we do alternative B, the financial impact is this much. So we need a management accountant who understands the business and understands how costs work. Okay? Costs and revenues work. Because that's essentially what we need to understand. And lastly is control. Okay? What is the concept of management control? Okay? Management control means, di ba, nagplano ka na, meron ka ng budget. As you implement the budget, of course, there will be deviations from the budget. The budget is not a perfect instrument, right? There will be deviations. Okay? The process of gathering feedback on the implementation of those plans, so, and comparing them against the budget is called management control. Okay? So management control is important because it serves as a feedback mechanism. It's a feedback to your next planning season, right? Kasi if you're not gathering information on what's happening on the ground and not comparing it against your budget or your plans, then you are not able to learn and adapt. no, and have that input for the next planning cycle. Okay, so and of course, paano ka naman magkakaroon ng proper input into the next planning cycle? You need to understand what happened, versus the plan. Okay? So therefore, there has to be some form of analysis, actuals versus the budget. No? And we need to measure performance across the organization. So as we measure the performance across the organization, we know that this unit, for example, is doing well because of X, Y, and Z. This unit is doing well because of A, B, and C. And with that information, it is a, a set of information that will propel you to the next planning process. Okay? Now, how is management accounting relevant to, say, marketing majors? Okay? It's relevant because marketing majors plan for example, budget for TV, print, and internet advertising. So they need to understand how to budget. Okay? For example, how many salespeople should we plan to hire to serve a territory? Okay? You need management accounting information to be able to answer that question. What kind of marketing decision making needs management accounting skills? Okay? One question is, should we sell our services as a bundle or sell them separately? There are pros and cons, right? And there's a financial impact for both. Should we sell directly to customers or use a distributor? Obviously, that's a marketing question. Okay? Direct selling or through a distribution, these have cost implications as well. Okay? Control, is the budgeted price cut increasing unit sales as expected? Okay? Nag-invest ako ng 200 million for a commercial with Chris Aquino. Is it delivering the sales that I expected? I need to understand if it's happening or not. If it's not happening, that's an input next cycle. Should I hire Chris Aquino again? Probably not. Probably yes, depending on what's happening. Okay? So those are some relevant questions where management accounting plays a key role. For supply chain management majors, okay, what are some questions about planning? How many units should we plan to produce next period? Okay. I mean, production planning is very much intertwined with management accounting, okay, because you need to understand how costs flow so that you can plan your production. Okay. Cost flow is very important to understand so that you have a full understanding of your production budget. Okay. How much should we budget for next period's utility expense or depending on the production, right? So you have those questions will be answered by management accounting skills or management accounting information. Second is decision making. Should we transfer production of a component part to an overseas supplier? Okay. Should we change suppliers? Should we redesign the manufacturing process to lower inventory levels? What's the financial impact of lowering inventory levels? Okay. At the end of the day, okay, these decisions must be profit accretive. By profit accretive, we mean it improves profitability. If it's not profit accretive, it will be very difficult to support one decision over another. Lastly, did we spend more or less than expected for the units we actually produced? Okay, so again, actuals versus budget. Are we achieving our goal of reducing the number of defective units produced? We budgeted a certain amount of defective units as part of normal production. No? Are we overperforming it or underperforming that assumption? Why are we overperforming it or underperforming it? But those are valuable pieces of information. Okay? For HR majors, it's also very relevant for planning. How much should we plan to spend for training? How much should we plan to spend on employee recruitment? You, know, you can compile data on that, and based on that data, you will have the answer. Okay? And management accountants do that. Okay? Decision making: should we hire on site Medical staff to lower our healthcare costs, or should we outsource all the healthcare costs? Should we hire temporary or full-time employees? Which one's more expensive? Um, and then, in terms of control, again, the scheme for control is comparing against your goals. So are you achieving, overachieving, underachieving versus your goals? Now, of course, you are not all accounting majors. I mean, some of you may not be accounting majors or not interested in numbers. But I think this is still very relevant to you because the primary purpose of this course is to teach you that there's a measurement for anything. To teach measurement skills that management use to support planning, controlling, and decision making. Okay? At the end of the day, there's a key performance indicator that you can measure, okay, that will allow you to say whether your planning is okay, your control is okay, or your decision making is okay. So that's the idea, behind this course. A very important concept for this course is the concept of costs. Okay? Kung napansin nyo, lahat ng binanggit ko kanina is related to cost. You need to know the cost so that you can plan. You need to know the cost so you can decide. You need to know the cost, actual cost, so you can compare it against planned costs and you can control operations. Okay? So cost is a central element of this course. Okay? So very simple. What's cost? Cost is incurred when a firm uses a resource for some purpose. Pag may ginasta ka, that's a cost. Okay? Now costs can be grouped together. Okay? And those groups of costs are called cost pools. Okay? So costs are assembled into meaningful groups called cost pools. Na it could be categorized by type of cost or source, etc. Okay? So when you group together costs, it's called a cost pool. Okay? Now, third point, any factor that has the effect of changing the level of total cost is called a cost driver. Obviously, based on the word itself, cost driver, it is the factor that drives costs. And therefore, quite intuitive that a cost driver is that factor which changes the level of total cost. We'll discuss more of that later. And the last term is a cost object. A cost object is any product, service, customer activity, or organizational unit to which costs are assigned for some management purpose. Okay. The usual cost object that we see are the cost of products. Okay. So if you're a manufacturer of cell phones, for example, phone manufacturer, the usual cost object that you're looking at is the cost of a product. Okay. Also, from the different cost pools, a portion of those cost pools is assigned to a product, and that product is the cost object. Okay. However, it can also be the case where you are accumulating costs, to different cost objects aside from products. For example, a department. Magkano ang cost ng finance department? You can also accumulate costs by department, right? So that department is now the cost object. Hindi lang products ang cost object. Pwedeng organizational unit, pwedeng customer. Okay? For example, you are a carpenter. Meron kang regular customer. Magkano na yung total cost ko for that customer? So you can now aggregate all the costs and tag them to specific customers. My cost object is the customer, not necessarily the individual products that I am making for them. So based on different cost pools, I can determine the cost of any cost object. Okay? And the process of assigning, okay, like the process of segregating costs from cost pools to the cost object, that's called the concept of cost assignment. Okay? Cost assignment is the process of assigning costs to cost pools or from cost pools to cost objects. Okay? So there are several types of cost assignment methodologies. One are direct costs. Direct costs are costs that can be conveniently and economically traced to a cost pool or a cost object. Example, flour for pandesal. Obviously, ano bang laman ng pandesal? Ang laman ng pandesal ay flour, saka butter and salt and pepper and whatever. Okay. So, flour is a direct cost of a pandesal if the pandesal is your cost object. Why is that the case? You can conveniently and economically trace how much flour did you use for every pandesal, right? For every batch, you measured it. You can measure the amount of flour that you use for every batch, and then just divide it then by the number of pandesals that you got, right? So that's considered a direct cost. It's directly traceable. Or in a cell phone like this, okay, the cost of one LCD. Okay, that's a direct cost because there's exactly one LCD for this phone. Okay. Indirect costs, on the other hand, are more difficult, to assign to a cost pool. Okay. Why? Example is electricity used for baking pandesal. Why is it difficult? Why is it an indirect cost? It's difficult for me to actually compute how much electricity did I use for the whole baking process for pandesal. Gumamit ako ng kuryente gumamit ako ng ilaw, okay, sa kusina. Gumamit ako ng electric fan habang nagbibig. Gumamit ako ng electric mixer. Gumamit ako ng, ano pang ginamit ko? Electric oven, for example. Okay. While I know that I used electricity for baking, it is not convenient for me to actually trace and to compute how much exact electricity did I use for those four appliances. No? So, therefore, ang ginagawa na lang for indirect costs, no, an assignment is made. Na-assign na lang ng indirect costs to certain cost objects. Okay? We'll know more about this as we go on, no? But there are different ways to assign costs. But ang point lang is yung direct costs, since can be economically traced, they are exact numbers. You know exactly how much flour did you use. And therefore, you know exactly the cost of flour. Okay? For electricity, it's impossible for me to determine how much I exactly use, right? And so therefore, baka better if assign na lang natin, estimate na lang yung process of estimating how much is the cost that I incurred is called cost assignment. Okay? So that's the idea behind cost assignment. Some costs are direct and indirect depending on the cost driver. Or depending on the cost object. For example, um, for example, let's use paper. Okay? If my cost object is this cell phone, I don't know if you can see this cell phone. This is my cost object. The papers used in handling journal vouchers or yung mga financial records, the papers that you use for financial records are indirect costs. I cannot trace specifically how much paper was used so that this phone can be made or can be produced. So papers in that sense is an indirect cost. But if my cost object is the department, paper can actually be a direct cost, right? So ang cost object ko is department costs. Because I know exactly how much paper did the finance department buy, right? So from that perspective, no, papers used is a direct cost rather than an indirect cost kasi it's directly traceable to the department. It's a direct cost of the department, but it's an indirect cost of the final product. Okay? So it depends, on the situation, whether it's direct and indirect. Okay? To give a graphical representation, for example, I think this is for a car. No, baka hindi car. Say, ayun pala, dishwasher and washing machine. Those are the products. The costs are categorized by electric motor, materials handling, supervision, packing, and final inspection. Okay? A company may define two cost pools. There could be an assembly cost and packing costs. Okay? This electric motor is directly traceable to assembly, and therefore this is a direct cost. Okay? Materials handling, pwede siyang pang-assembly and pwedeng pang-packing, which means it's indirect. Okay? And to get the amounts for assembly and packing, what do? We do cost assignment or cost allocation so that we can allocate the cost to those cost pools. Okay? The same is true for supervision. For packing materials, it looks like a direct cost of packing. And so there's no cost assignment being done there. Pero for pero for supervision, it looks like it needs to be allocated. Okay? And from those cost pools, when those cost pools are directly attributable to this cost object, then this is a direct cost. Okay? But for packing, it seems that it is attributable to two products, which means it needs to be allocated. So you need to do cost assignment. Okay? So that's the context between costs, cost drivers and cost assignment, cost pools and cost objects. All right. Let's further define direct and indirect product costs for a manufacturer. So we have four definitions here: direct material costs, indirect material costs, direct labor, and indirect labor. Okay? So we are now combining two concepts: direct and indirect costs and material and labor costs. Okay? So what are material costs? Material costs are cost of materials, diba? So those are usually um, costs that go directly or readily traced into the outputs. So a direct material is a cost or material that can be readily traced to outputs. LCD in the case of a phone. Okay? What are some indirect material costs? There are materials that we are using that it's impossible for us to trace directly into a phone. Say rags, lubricants, small tools, okay? Glue. So we know everything has glue, but we don't know specifically. So therefore, they are material costs, but they are indirect. Okay? Labor costs are labor that can be readily traced to outputs. So therefore, yan yung mga laborers, production, nag-operate ng machine. So those are direct labor costs. Indirect labor costs, on the other hand, are labor costs that cannot be traced. For example, manufacturing support. Yung mga planners or mga janitor, for example, they are costs of manufacturing kasi nililinis nila yung planta. But you cannot trace it to a specific product. So those are indirect labor costs. Okay? So all indirect costs, are often combined into a cost pool called overhead. Okay? So when we talk about overhead, usually we're talking about indirect materials and indirect labor. Okay? And usually they are all combined into a cost pool called manufacturing overhead or factory overhead. Okay? So pag nakakita ka ng costing na factory overhead or manufacturing overhead, it means those are the indirect costs that um, cannot easily be traced. And therefore, they are being aggregated. Sabay-sabay na lang silang ina-assign later on. So some other definitions are prime and conversion costs. Prime costs are the sum of direct materials and direct labor. And direct and conversion costs are direct labor plus overhead. So definitions lang yun. Another delineation for costs are product costs and period costs. Okay? What are product costs? Product costs are the costs necessary to complete the product at the manufacturing step in the value chain or to purchase and transport the product to the location of sale. Okay? I think the product costs are costs that are inventoriable. ibig sabihin ng inventoriable costs? Costs that are part of the cost of the inventory. And because they are part of the cost of inventory, they are not expensed immediately. Like if you remember, ang inventory, nagiging asset muna. Okay. And after that asset is sold, that's the time that it becomes part of cost of goods sold. Okay. Product costs are the costs that are included to the inventoriable costs and therefore not expensed immediately. They will only be expensed once they are part of cost of goods sold. Okay. Period costs, on the other hand, are called non-product costs. Okay. And therefore, these are costs that are related to managing or selling the product, which are not inventoriable. And because they are not inventoriable, they are expensed as incurred. Okay? Kaya ang tawag sa kanila period costs kasi expensed in the period where incurred. Okay? So that's the key difference between product costs and period costs. Okay? These are just introductions because we will be using these terms later on or in subsequent lessons. Okay? Now let's look at the cost flows for a manufacturing company. Okay? For a merchandising company, ano yung merchandising company? Sari-sari store, for example. Anong ginagawa ng sari-sari store? The first step is to buy inventories, right? And then, when you buy inventories, it becomes cost of goods sold once sold. Okay? That's the intermediate step. Okay? But for manufacturing companies, okay, maraming steps. The first is you have to buy the materials first, right? Hindi naman, for manufacturing companies, hindi naman bubuo yung product basta-basta. Hindi mo muna yung materials. Okay? So as the materials are purchased, it goes to inventory first. Okay? And as the inventories are used and as labor and overhead are spent, they're all accumulated in work in process inventory, which is a balance sheet account. Okay? So that's the work in process inventory. No? Once it's finished, tapos nang gawin, it becomes finished goods ready for sale. And it goes to the income statement as cost of goods sold once it is sold. So the manufacturing company is a little bit more complicated, okay? Because you have several inventory items. Okay? First is materials. Okay? Second is work in process, and third is finished goods. Okay? And as you go from materials to work in process to finished goods, you are incurring costs throughout that process. And since you're incurring costs throughout that process, you need to allocate it or assign it to the cost product so that you know the product costs that you will expense to cost of goods sold. So this process, this is part of the cost accumulation and cost assignment step. No? Kasi as the product is being produced from materials, you are spending for materials, you are spending for labor and overhead. No? And therefore, you need to assign costs and accumulate costs so that you know the final cost when you go to finished goods. And that amount is the amount that you spends as cost of goods sold once the product is sold. We will discuss more of this in the next weeks. No, this is just an introduction. Another concept that's very important is to determine the cost behavior, behavior of costs. How does costs move, essentially? Okay. So for us to determine the behavior of cost, we need to understand the drivers of costs. And generally, there are four types of cost drivers. Okay? And we'll discuss each of them in the next slides. Okay? Activity Value-based cost drivers are developed at a detailed level of operations using activity analysis. Cost driver is determined for each activity. Essentially, you are looking at the value chain, okay, of the production of a product, and there are different activities assigned. No? And based on those activities, pwedeng iba-iba yung driver ng cost of those activities. And therefore, based on the detailed activity analysis, the cost driver is determined for each activity, and therefore you get the total cost by applying the drivers for each activity. Okay, so that's an activity-based driver. Second is a volume-based cost driver, which is the simplest. Essentially, if, if the cost driver is volumetric, it means that um, costs move with total costs move with the volume sold or produced, which is usually the case naman. Diba? As you produce more, of course, you have to spend more. Okay? So it's the more simplified version, of cost drivers. So here you will see that usually we are using volume as the basis of cost drivers. So for volume-based cost drivers, there are four usual kinds of costs. One is fixed cost. Okay? Costs are fixed when total cost does not change with changes in output or volume. It remains fixed. Okay? Variable cost, on the other hand, is um, the change in total cost associated with each change in quantity of the cost driver. Okay? Variable, which means total costs move with the with volume or whatever the cost driver is. Okay? Fixed cost, fixed pa rin, regardless of the volume or cost driver changes. Right? Mixed cost is when there is a fixed and variable component, and step costs are costs that vary, no, but do so in steps. Okay? We will discuss more of this next session. Okay? This is just an introduction. Now, even though this course deals with cost accounting information or financial accounting information, there are certain qualitative characteristics of cost information that we need to understand and to appreciate. Okay, number one is that, of course, even though estimates are allowed, of course, we value accuracy. Okay? Accuracy is still an essential element of management accounting information. But what we're just saying is that if accuracy cannot be achieved, estimates are okay. It gives us a clear understanding or a clear direction on where to go if we have an estimate at least. Okay? Cost and the value of cost information. Sometimes the cost of obtaining information is greater than the benefits of obtaining that information. Okay? So if you need to hire someone to himay the costs for you, then probably it's not worth doing it. No? Okay na ako sa medyo dirty na cost information. Okay? And timeliness often involves sacrificing in the other two areas, and those two areas are relevance and uh, reliability and accuracy. Okay? If you need more timely info, then usually um, there's an element of error to it. Okay? And you have to accept that and consider that in your analysis for management accounting purposes. So there, that's it. So that's it for our introductory lecture for management accounting. Thank you and see you next time.